guys, myself Anshuman Jaiswal welcome you all in my Commerce Gateway classes. In today's lecture, we are going to cover the most important concepts of depreciation accounting of straight line method, which is frequently asked in the examination. And the name of that concept is treatment of a sale of a part of an asset or treatment of a sale of the book value of the asset. So let's get started to our illustration by covering its practical concepts. So first, before moving on to the practical concepts, let me explain. So the name of the first concept is treatment of sale of part of an asset. The meaning of this is that suppose I am purchasing a machine of rupees 40,000. Purchased a machine for rupees 40,000. After 2 years, I sold an asset. I sold an asset that is 1/3. That is 1/10 of it. 1/10. No, not. Let me not take 1/10. Let me take it 1/2 of it at rupees 8,000. So this is called the treatment of a sale of an asset. We are selling the part of an asset. It can be half, 1/3, 1/4, 1/5, 1/6 depending upon the question. So this is our first concept. And our second concept is treatment of sale of book value of an asset. Now, taking the above example, that purchase machinery for rupees 40,000, and after 2 years, sold at book value, rupees 12,000, and the sale value let us suppose it can be anything 5,000 for example. So this is the treatment of the sale of the book value of the asset, and this is the treatment of the sale of the part of an asset. So based on this concept, now we will deal with 3 practical questions based on this. So let's get started to our video. So our first question number 1, which I am going to deal with it, that is, the company is following the calendar year. First, the company is following the calendar year, means the books are closed on 31st December every year. This is the first part of the question. Second part is that machinery 1, M1, machinery 1 was purchased on 1st of April 2017, and its value is rupees 30,000. Okay. Part third of the question is that machinery 2 was also purchased on 1st of October 2017, and the value is rupees 20,000. And part 4th of the question, part 4 is stating that machinery 3rd was also purchased on 1st July 2018, and the cost is rupees 10,000. And part 5th is stating that on 1st January 2019, M1, the machinery 1 which was installed was sold its 1/3, was sold at its 1/3 value at rupees 3,000. And part 6 is telling that depreciation charged at the rate 10% on straight line method. So prepare machine account till 31st January 2019. As the data is given in the question like this, and according to that we have to prepare the account. So let's get started to our solution for it. So you can take the screenshot of the question or pause the video, or you can write the question. Now I'm going to do the solution for it. So first again you have to draw the format, that is machine account. You have to write a debit, credit. The format will be same of preparing any account. You have to write a date, write here particulars, write here amount, date, particulars, amount. Okay, now you have to draw the line. And now we will start a question. The first machinery we are purchasing it on 1st of April 2017. So you have to write it 2017, 1st of April. So we will write it to bank account. You can write it M1. That is, we are purchasing machinery 1 at rupees 30,000. We are purchasing the machinery at rupees 30,000, and the depreciation will be charged of 31st December, because the books of accounts are closed on 31st December. The company is following the calendar year. So we'll write here 2017, 31st December. So by depreciation. So you can calculate the depreciation, that the amount of depreciation will be 30,000 into 10%, and from April to December, how many months it will be? It will be April, May, June, July, August, September, October, November and December. So it will be 9 months. 9 months. So on the basis of this, you have to calculate it, or to make it more simpler calculations, so that later you have to do not do calculations for the part of the sold of it. You can do it that divide this machinery into 2 parts. That means it will be 30,000 and we are selling 1/3 part of it. So replace that 1/3 part here only instead of doing later on. So 30,000 1/3 will be 10,000 and 20,000. So total it will be 30,000. And here also you can do the same thing. You can calculate a depreciation for 10,000 different and 20,000 different. So you can calculate it first. You can calculate it for 10,000. So 10,000, 10%, and for 9 months it will be 1,000, 3 by 4. It will be 750. So 750, and here for 20,000 it will be 20,000, 10%, 3 by 4, that is 9 by 12. If we divide it, we get 3 by 4. So it will be 2,000, 4, 500. It will be 1,500. We can do the calculation, we will get the same answer. It will be 1,500. So if we total it, we will get 22,250. This is for M1. Wait children, let me see the question, that any more machinery is purchased or not on the same year. One more machinery is purchased on the same day, that is on 1st of October. We are purchasing one more machinery. So we are purchasing the machinery. You have to write here again to bank account. This is for M2, and M2 we are purchasing it for rupees 20,000. Now the depreciation will be calculated for one more machine. So 20,000 and 10%, 2,000, and from October to December it will be 3 months. So it will be 500. So it will be 27,050. So we get 2,750 M2. Okay students, hope so the concept is getting clear to you. These two values are for machine 1 and this is for machine 2. Now we can carry the balance carried down 31st December by balance carried down. So the balance carried down will be 10,000 minus 750, 9,250. 20,000 minus 1,500, 18,500, and it will be 20,000 minus 500, it is 19,500. So if we will total it, here we will get 50,000, and here we will get 5,000,8, 38,000, 38,900, 250. It will be 47,250. 47,250, and if we total it, we will get 50,000. Hope so the first year is get clear to you. Now this balance carried down will be brought down in the next year. So 2018, 1st of April, sorry, 1st of January. So 1st of January, two balance brought down. So the balance brought down will be 9,250. You have to show it here, machine 1 and machine 2. 9,250, 18,500, and third 19,500. So if we total it, we will get 47,250. M1, M2. Now let me check that whether in this year any machine is purchased or not. Okay, in this year the machine is purchased on 1st July. 1st July. So you have to write here 4, that is write it to bank account, that is to bank account, you have to write here M3, that is it will be 47,250 and plus 10,000. Okay student, hope so the concept is getting clear to you. Now the depreciation will be charged after 1 year. So 2018, 31st December. So we will write it by depreciation account. So for first machinery the depreciation charge will be 3,000. So no, it will be 1,000 since we are breaking the machine into two parts. The first machinery is getting divided. 2,000. So this you have to write here M1. For third machinery the depreciation will be charged 2,000. For second machinery, and for fourth machine, that is we have purchased, this will be also the depreciation will be charged. So it will be 10,000, 1,000. We can calculate it 10,000, 10%, and from July to December, July, August, September, October, November, December, for 6 months the depreciation will be charged. So it will be 500. Machinery 3. So if we total it, we will get 5,500. Hope so the way I am calculating depreciation is clear to you. Now we will carry the balance of it 31st December. So the balance carried down will be by balance CD. So the first machine 9,250 minus 1,000, 8,250. Second machine 18,500 minus 2,000, 16,500. For third machine 19,500 minus 2,000, 17,500. And for fourth machine 10,000 minus 500. So it will total it will get 9,500. Now let us total here that what will get the balance. 16,500, 17,500. So it will be 0,004, 34,000 and 9,500. So it will be 500 here, 43,500 and 8,250. So here we get 0, 5, 7, 51,750. We get the balance. So if we will total it here, if we will total on this side, we will get 57,250, and here we will get also 57,250. Now for one more year we have to prepare an account. So I am carrying this balance over here on the next year. So now we will prepare of 2019. So let me erase it. Hope so you have noted down. So I am carrying the balance, that is 2019. 2019, 1st of January. So 1st of January, we will write a two balance brought down. So the balance brought down will be 8,250, 16,500, 17,500 and 9,500. So this is for M1, this is for M2 and this is for M3, and total we get 51,750. Now let me erase this part. Now we'll do the calculations regarding depreciation. So now in this part, let us see that in this year, let us see that any adjustments is there or not. So in this question, on 1st January only we are selling an asset. So 2019, 1st January we are selling an asset. So let us write the sale value here as it is recorded only, as I told in the previous class, by bank. Sale value, it is 3,000. As already told in the previous class that we can't change the depreciation because the first machinery we are purchasing is on 1st January and we are selling it also on 1st January. So no depreciation will be charged. So if the month is different, then we can charge the depreciation. Otherwise, no depreciation will be charged. So we are selling 1/3 of it. As I already calculated, split that machinery into two parts. 1/3 different and 20,000 is different. So we are selling this part. So 8,250 and the sale value is 3,000. Directly we can minus it. So we are incurring the loss of rupees 5,250. You can straight away show here. No need for depreciation. So by profit and loss account. So we are incurring the loss. You can show here 8,250 minus 3,000. So it will be 5,250. And now for the remaining, you can calculate the depreciation because we are selling only 1/3 of it. So that's why we are not calculating depreciation, and the depreciation of no use because we are charging it on 1st January. So now you can write a 31st December by depreciation account. So this machinery value is 2,000. So you can write here 2,000. Second machinery we have purchased, let me see it at which value we have purchased. We have purchased it for rupees 2,000. So 2,000. And third machinery 1,000. So if we total it, we will get here 5,000. Now we will adjust the balance. So 31st December by balance carried down. So the balance carried down will be 16,500 minus 2,000, 14,500. Second, 17,500 minus 2,000, 15,500. And third, 9,500 minus 1,000, so it is 8,500. So if we total it, will get 14,500, 15,500, 0, 0, 0, 0, 30,000, 30,000, 8,500. So 38,500 will get here. And let me total it that whether it is balanced or not. 51,750 here and 38,500 and 5,000. 43,500 and 8,250. So 750 here, 51,750. So here we get our answer. Hope so the concept is clear too. If you have any inquiry, you can comment on my comment box, or you can call me or WhatsApp me. Now we will move on to a second question. So the second part of the question, or the second question, is quite similar to this question only. So wait, let me rub it. So we will do question number 2. Now what the question number 2 is stating, let us see. So the question number 2 is stating that first part, that the company is following financial year. Means the books of accounts are closed on 31st March every year. This we have given the data, first part. Second part of the question is stating that 1st of October 2016, machinery 1 was purchased for rupees 40,000. Second part of the question, third part of the question is stating that 1st of October 2018, machinery 2 was purchased for rupees 10,000. Fourth part of the question is stating that on 30 September 2019, the machinery 1 we have purchased, we are selling half of it. We are selling half of its value at rupees 8,200. 8,200. Fifth part, depreciation charged at the rate 10% per annum on fixed installment method. So prepare machine account. It's very simple to calculate. Now it is quietly similar to previous question. So let us try to do the solutions for it. Okay. Now I am rubbing it. You can take the screenshot. I am going to do the solution for it. Now we have to again prepare machine account. Machine account. Again you have to write a date, particulars, amount, date, particulars, amount. Okay. Now we are going to do the solution for it. Now we are purchasing the first machine on 2016, 1st of October. So we have to write it to bank account, M1. Again, you can split that machinery into two parts because later we have to sell it at its half value. So the first machinery we are selling it for, the first machinery we are purchasing it for rupees 40,000. You can split it into two parts, 20,000 and 20,000. So we are getting 40,000. And now, okay, now the depreciation charge after 1 year, so 2017, 31st March by depreciation. So for yearly we can charge 2,000 here and 2,000 here, and if we total it, we will get 4,000. Now we will carry the balance. Balance carried down will be 20,000 minus 2,000, 18,000, and 20,000 minus 2,000 we will get 18,000. So if we total it, we will get 36,000. So now we will write a 40,000. Again in next part we will carry this balance, we will brought down here, that is 2017, 1st of April. Two balance brought down. So the balance brought down will be 18,000 and 18,000. Let me check that whether in this year any adjustments made or not. No adjustment is made, so we can simply charge the depreciation, that is 2018, 31st March by depreciation account. So the depreciation accounting, the depreciation will be charged of rupees first 2,000 and this is also 2,000. So it will be 4,000. Okay, now we'll carry the balance. Remember children, these two balance is of machinery 1 only. We are not creating any additional machinery, we are not purchasing any other additional machinery. So we are doing an adjustments on machinery 1. Now again the balance carried down will be by balance sheet. So the balance carried down will be 18,000 minus 2,000, 16,000, again 16,000, so we'll get 32,000. Now we will total it, we will get here 36,000. Now When we are selling machine, we are selling it around 2019. So one more year we can adjust it. So 2018, 1st of April, to balance brought down. So the balance brought down will be 16,000 and 16,000. Here it will be 32,000. So this is for M1. Now we have purchased another machinery and we have purchased it on 1st of October 2018. So we'll write it to bank account, that is M2. So M2 is created for rupees 10,000. Machinery 2 we have purchased it for rupees 10,000. So no, it's simple calculation, you can do it very easily. That now the depreciation charge after 1 year 2019, 31st March. So by depreciation account, 2,000 for first, 2,000 for second, M1, and for third machinery 10,000, 10%, and for 6 months it will be just 500. So 500 we get the for second machine, so M2. So it will be 4,500. Now carrying the balance over here by balance CD. So the first machinery the balance charge will be 14,000. Second machinery also 14,000. And third machinery will get 10,000 minus 500, 9,500, and we will total it will get 37,500. So it will be 42,000, and here we will get 37,000 and 4,000. Here also it will be 42,000. So now these balance carried down will be brought down in the next year. So now we will rub it. I am carrying the balance over here. So now in 2019, 1st of April. So this balance carried down will be brought down in the next year. So to balance brought down. So the balance brought down for first machine will be it will be 14,000. Second machine 14,000. This is 2 for first machine, and for second machine it will be 9,500. So when we will total it, we will get 37,500. Now let us see that what the question is telling in this adjustments. So now in this year the question is telling that on 30 September 2019, on 30 September 2019 we are selling the first machinery its half value, that is at rupees 8,200. So we have to write here by bank sale value, we are selling it 8,200, and we have purchased it, and the balance today of the machinery is 14,000. So we have to calculate the depreciation. So by depreciation account, the depreciation calculated will be 20,000, because I split the machinery into two parts, 20,000, 20,000, its half value will be 20,000, 10%, and for 6 months it will be 1,000. You can calculate it, you will get 2,000, 2,000, just half of it, you will get 1,000. So now let us state that, let us find out that whether it is profit or loss. So now 8,200 plus 1,000, 9,200 minus 14,000. So we will get the loss. So 30 September by profit and loss, it will be 14,000 minus 9,200. We will get 5,800. It will be 5,800, 10 to 8, 39. It will be 4,800. We are incurring the loss of 4,800. So now the on remaining, the depreciation will be charged. So let me see that how the depreciation will be charged. Let me see. 2019 31st March 2020. Now we are calculating for remaining machinery. So by depreciation accounts, first 14,000, again it will be 2,000, and for second machinery it will be 1,000. So if we total it will get 3,000. Now by balance carried down. So the balance carried down will be 14,000 minus 2,000, 16,000. It will be 12,000, and 9,500 minus 1,000 is 8,500. So we get 20,500. 14,000, 9,500 minus 8,000. Now let me totally that whether the answer is coming correct or not. So 20,500, 23,500, 23,500 and 4,800, it will be 300 here, 4, 3, 7, 28,300 and 9,200. 500 here, 7 here, 37,500 we get the total. So, hope so the concept is getting clear to you. The question is quietly similar to previous question. Now, we will deal with last practical question of this session. So, let us start with the question. That is question number 3. So let us see that what does question number 3 states. Question number 3, wait, let me open. The question number 3 is stating that the company is following financial year. Which year? Financial year. That means the books are closed on 31st March every year. This is first part. Second part is that on 1st of April 2017, the M1 was purchased, that is machinery 1 was purchased for rupees 2 lakhs. 2 lakhs. Third part of the question is stating that on 1st January 2018, M2 was purchased for rupees 10,000. In the next year, on 1st of October 2018, 1st of October 2018, M3 was purchased for rupees 20,000. And fifth part, that is on 1st of July 2019, M1, whose book value is rupees 30,000. 30,000 was sold for rupees 16,000. Again the question is telling that prepare depreciation charge at the rate 10% per annum, and again you have to prepare the machinery. So we will follow the same procedure. We will divide this machinery into two parts, that is 30,000 different side and 1,70,000 on different side. So it will be clear to you when I will do the solution for it. So you can take the screenshot of the question or you can write it by pausing the video. So I am getting the solution for you. So let me rub it. So again you have to prepare here machine account. So you have to write here a date, particulars, amount, date, particulars, amount. So now, first machinery we have purchased on, when we have purchased the first machinery, we have purchased the first machinery on 1st 2017, 1st of April. So to write it to bank account M1 and split the machinery into two parts, because later on we will sell it, so do it earlier only. So 30,000 here and 1,70,000 here. So we will total it, we will get 2 lakhs. This machine is divided into 2 parts. And on next year and in the starting of the year, that is 1st January 2018, we are purchasing another machinery, that is 10,000. So to bank account, to write here M2 10,000. Now you can simply calculate the depreciation for these 3 items of the machine. So 2018 31st March by depreciation account. So for first machine 30,000, 3,000 simple it will be. For 12 months the depreciation will be charged 1,70,000, 17,000 M1, and for M2 10,000, 1% that is 10,000, and January, February, March for 3 months the depreciation charge will be 250. So 250. So here the depreciation value will be 20,250. We get the value. Now we'll calculate the balance for it. 31st March by balance sheet. So the balance carried down will be 30,000 minus 3,000, 27,000. 1,70,000 minus 17,000, 1,53,000. And 10,000 minus 250, 9,750. So we will total it, we will get 1,53,000 and 27,000. 1,80,000 and 9,750. So it will be 1,89,750. And when you will total it, you will get here 2,10,000. Total it, what will get? 1,80,000, 20. So here it will be 0, 0, 0, 9. You can total it directly 1,89,750 and 20,250. 0, 0, 21. So we get 2,10,000. Now we will carry this in the next year. We will brought down this in the next year. So 2018, 1st of April, to balance brought down. So the balance brought down will be 27,000. This is for M1 and this is for M2. 27,000, 1,53,000, and third 9,750. So we get 1,89,750. M1, M1 and M2. Now let us see that whether in this year any adjustment is made or not. So on 1st of January 2018, we have done the adjustments of the 1st of October 2018. So we have purchased one more machinery, that is to bank account. We will write here M3 and the value is 20,000. So when we are selling a machine, we are selling a machinery on 1st July 2019, that is in the next year. So in this year there is no problem, we calculated depreciation. 2019 31st March by depreciation account. So we can simply calculate depreciation. 3,000, second 17,000, third 1,000, and fourth we are purchasing another machinery. 20,000, 10%, 2,000, and just half of it will get 1,000. M1, M2, M3. So 10,000. So if we total it, will get 17. Let's see, 20, 22,000. And the balance carried down will be first. You can subtract it from there. 27,000 minus 3,000, 24,000. Second, 1,53,000 minus 17,000, 153 minus 17, we get 6, 1,36,000. 3 plus 4, 1,36,000. Third, 9,750 minus 1,000, 8,750. And fourth, 20,000 plus 1,000, 19,000. So when we will total it, what we will get? 136 24. 160, 8,750. We will get 1,68,750 and 19,000. It will be 750,7 6178 1,87,750. Now let us see that whether we are doing the total is that correct or not. So here we get a value 20,000. So 2,09,750, and here we get 1,87,750 and 22,000. 729, 2,09,750. So our both sides is getting tally and we are doing the questions correctly. Now we have to rub it and we have to carry this in the next year. So now for the last time we are preparing a format. So 2019, 1st of April, to balance brought down. So the balance brought down will be 24,000. Second, 1,36,000. Third, 8,750, and fourth, 19,000. So these two, machinery 1, machinery 2 and machinery 3, and we have total it, we have get 1,87,750. So in this case we are selling, in this year we are selling an asset. In this year we are selling an asset. Now let me see that what is its value we are selling. So in this we are selling an asset, that means on 2019 1st July we are selling an asset, and the sale value is by bank, sale value is rupees 16,000, and the depreciation will be charged at the book value 30,000. So 30,000 we have already split it, that is first machine, that is 30,000. So calculate the depreciation, 30,000, 10%, and April, May, June, for 3 months the depreciation will be calculated. So 3,000, and for 1/4 we get 750. So we get depreciation 750. Now we can find out that whether we are incurring the loss or profit. So we have 24,000 and here it is 16,750. So obviously we are incurring the loss. So we have to write here the loss by profit and loss account, and we have to calculate the difference. 24,000, 16,750. So 250 here, 3, 7, 7,250. So we get 7,250. Let me see that whether it is correct or not. 16,750 and 7,250. 24,000. So we are incurring the loss of 7,250 and the answer is coming is correct. Now we will calculate the depreciation for remaining machinery. So 2019, 2020, 31st March by depreciation account. So the depreciation account calculated will be, it will be 2,000. Wait, let me see. The question is rough, so I am not having the screenshot of it. So it will be 17,000 for first. Second, it will be 1,000 for next. Third, it will be 2,000. No, it is adjusted. So we get here 20,000. And the balance again you have to carry it down. The balance carried down will be, you can simply subtract it. 136 minus 17. What will get? 136 minus 17. We will get 1,17,000 here. 1,17,000 and no, 1,19,000. 1,19,000. Second, 8,750 minus 7,750 and 19,000 minus 2,000, 17,000. So we will total it. We will get 1,19,000 and 7,750. So it will be 750 here, 1,26,750 and 17,000. So it will be 750 here, 3 here, 1, 2 plus 3 plus 4, 1,43,750. 43,750. So let me see that whether the total we have calculated is correct or not. 1,43,750, 20,000. 1,63,750 and 16,750. 16,750. So 0, 0, 5, 1,80,500 and 7,250. 1,87,750 here also and 1,87,750 here also. So this was all for today's question. Hope so the concept is clear to you. So if you like the video, please subscribe, share it. The next video will coming very soon. Till then, thank you, stay safe and have a nice day.